Hi there, Shingirai here again with another update on portfolio performance over the past week. On a 1-week basis, 4 out of 10 of the CBAM portfolios outperformed their respective benchmarks, with returns ranging from minus 0.43% up to 0.95% for CBAM 1v2 and CBAM 5 respectively. In terms of detractors from performance, we did see some weakness there from LNG All Stocks Gilt Index Trust, down minus 1.61% on the 1-week basis, as investors mouthed the potential weakness in the longer dated government bonds if the Bank of England were to hike their base rates. We also did see some profit-taking activity in the US equity space, and I would see some weakness from Artemis US Extended Alpha, down 1.34%, and then some concerns around the rising number of COVID cases in the European space, and that would see Aberdeen European smaller companies down 1.29%. In terms of positive contributors to performance, we did see some respite in terms of the Chinese equity space, and I would see HSBC MSCI China and Baillie Gifford Chinese equity funds both up more than 5.6% on the 1-week basis. And then obviously inflation has been less transient than initially expected, and investors fearing for stickier inflation have flooded into the gold commodity as a hedge, and that would see 91 Global Gold up 7.58% on the week. On a year-to-date basis, portfolio 9 out of 10 of the CBAM portfolios outperformed their respective benchmarks, with returns ranging from 3.38% for CBAM 1v2 up to 18.23% for CBAM portfolio number 5. In terms of detractors from performance, we did see some weakness throughout the year from Chinese equity, and that was on the back of regulatory crackdown in some of the online retail companies and private education, alongside some weakness in the Chinese property debt market, and that would see some weakness in performance from HSBC MSCI China Equity Tracker, down 10.54%, alongside Threadneedle China down 10.08%. And then we did see some weakness as well from iShares Global Clean Energy, down 10.10% on a year-to-date basis. In terms of positive contributors to performance, we did see continued sustained strength in terms of the performance of the Indian equity market, and that would see equity Indian subcontinent up 49.85%, and then some reward for market cap here in both the European and American space, where we saw the S&P 600 smaller companies from the US delivering 33.71% on a year-to-date basis, and the Aberdeen European smaller companies up 29.57% on the year-to-date basis.